I'm Doris. I'm here to share with you about my stock account update. Today, my stock account has made a loss of $155. U.S. stocks closed slightly higher on Tuesday, and their major indexes fell this week. U.S. corporate activity unexpectedly climbed to a year-high, reigniting inflation risk. So let's first take a look at my account. Right now, today's PL in my account is negative 0.21%. Right now, the net asset of my account is $73,477.42. Today, United Natural Gas continued to show the loss of 0.28%, but regained 0.28% in the post-market. United VIX short ETF showed a loss of 2.84% to 30.77, and Pro Short S&P 500 ETF showed a net zero loss or gain, and SQQQ made a loss of 0.26% and showed a gain of 0.07% in the post-market. Dow Jones Industrial Average closed higher to 0.07% to 33,808.96. Nasdaq Composite closed higher 0.01% to 12,072.46 points, and S&P 500 closed higher 0.09% to 4,133.52 points. Today, biotechnology rose 2.18%, and household rose 1.77%. Internet retail rose 1.55%, and diagnostics rose 1.35%. On the other hand, specialty showed a loss of 1.28%. Semiconductors showed a loss of 1.16%. U.S. stocks closed slightly higher on Friday, but all major indexes posted a loss for the week. Investors are moving closer to the Fed's monetary policy outlook. The Markit manufacturing PMI hit a 6-month high in April, while services PMI hit a 1-year high. All three U.S. indexes fell for the week, with the Dow down 0.23%, S&P 500 down 0.1%, and Nasdaq down 0.42%. Nearly 77% of the S&P 500 component companies have beaten analyst expectations so far, according to FactSet. Carl Schleif, Chief Investment Officer at the BMO Family Office, said, "So far, the earnings season has a flat start. Many companies have reached already lowered earnings estimates, which helps explain the lack of volatility in major indexes over the past days." She added that she expects stocks to remain a narrow trading range for some time. The earnings season continued on Friday. Consumer goods giant Procter & Gamble beat expectations and raised its sales forecast. In addition to the earnings report, a number of economic data released this week shows that the U.S. economy was in trouble. The U.S. Markit manufacturing PMI hit a 6-month high in April on Friday, while the U.S. market services PMI hit a 12-month high in April. After the release of the data, the dollar index DXY rose nearly 20 points in the short term. Now it's at 101.89. The PMI survey released on Friday showed business activities accelerate to an 11-month high in April, in line with growing signs of cooling demand, says Chris Williamson, chief business economist at S&P Global Market Intelligence. Business expectations for U.S. companies remain positive in April, and confidence in the outlook for the next year rose to the second highest level since May 2022. The increase in the data helps explain why core inflation has remained stubbornly high at 5.6%, and suggests a possible pickup in the consumer price inflation, or at least some stickiness. Now, jobless claims rose more than expected last week, while manufacturing activity in the Philadelphia area contracted even more than expected. In addition, the Conference Board main economic indicators continue to point to a future recession. Investors remain closely watching the Fed's monetary policy outlook. This week, several Fed's spokesmen supported the view that the Fed will raise rates by another 25 basis points when amidst the next week. In a speech Thursday, Cleveland Fed President Mester hinted support for a second rate hike to calm inflation, while citing the need to focus on the near-term banking pressures that could curb credit and suppress economy. He said, "I expect the monetary policy to move further into restricted zones this year, with the Fed funds rate rising about 5% and the actual federal funds rate remaining in the positive zone for some time." New York Fed President Williams said on Wednesday that pressure on the U.S. banks could lead to a credit squeeze, and that U.S. inflation remains too high, and the central bank still needs to maintain tight monetary policy. The market expects a 25 basis point rate hike in May to be 82.6%, according to CME's Fed Watch tool. Unlike the consensus that the Fed will raise its last time in May, Nomura thinks the chances of a rate hike in June increase. The agency noted that recent surveys showed a rebound in short-term inflation expectations, which put upward pressure on wage growth and thus posed a risk to supercore inflation. In his latest report this week, Nomura expects the Fed could raise rates twice more, including in May. Nomura's specific forecast is that the Fed will raise interest rates by 25 basis points in May and again in June if wage inflation remains high. U.S. corporate activity unexpectedly climbed to one-year high, reigniting inflation risk. U.S. business activity unexpectedly climbed to a one-year high this month, boosted by stronger services and manufacturing sectors, potentially leading to a return of inflationary pressures. The S&P Global's preliminary Composite Purchasing Managers Index (PMI) for April rose to 1.2% to 53.5 on Friday, hitting its highest level in May since last year. The index continued to shrink the second half of last year, but now has exceeded the 58 mark between expansion from contraction for 3 consecutive months. Corporate new orders jumped to their highest level in 11 months, with the services sector particularly strong. The company was able to press on rising costs to consumers, leading to the biggest increase in hop prices in 7 months. Demand tends to rise, followed by a resurgence in the price pressures, wrote Chris Williamson, global chief business economist at S&P, in a statement. Growth help explain why core inflation is stubbornly stuck at 5.6%, and suggests that consumer price inflation may rise, or at least be sticky. Raising inflation will reverse months of progress, with price increases still rising too fast. The Fed is expected to raise interest rates again next month, but policymakers are uncertain about how much the tightening needs to become. S&P's Global Service Provider Activity Index rose to its highest level in a year, while Manufacturing Activity Index expanded for the first time since October. Both industries had their highest hiring number since last July, but the backlog of orders were still growing as they struggle to attract and retain skilled workers. Companies remain optimistic about the outlook this month, with the confidence over the next year rising to the second highest since May. But even so, the optimism is still below average amid rising interest rates and high inflationary pressures. That's all I have for today. Thank you for listening. Don't forget to subscribe and like. See you next episode.